Theresa, would you be happy to introduce yourself to all of us?
Yes, sure. Thank you. Thank you for allowing me. Thank you so much for having me. Maybe a little bit of context. My name is Theresa Blissing. I'm originally from Germany, but I have spent a decade living in Asia Pacific. First time I moved to Asia was when I was working for Italian insurer Generali. That was back in 2009. So quite a few years ago. And that's when I really first got introduced to, the insurance market in Asia and, the different challenges, but also opportunities this continent is facing compared to, my home market, Germany. Today, I actually live in New York. Not necessarily my choice, but my husband is working for the United Nations. So we relocated to New York for 3 years and really excited to be joining you here today and talk a little bit about my upcoming book. Well, not upcoming, it's actually released today. So really exciting day for me.
Congratulations on that again, because that was a lot of work that we saw you put into that book. Again, like I mentioned earlier on, it was a good read. It was insightful. It was packed, and there are learnings, from that book that could be replicated across, various insurance businesses across the globe. Right. But I know that, your journey into the insurance space started from, if I'm correct, right? Started from when you were young, because your parents, right, already had like exposure to the insurance space. So was there any point where you felt like I was, just going to continue or toe that line? Or there was some point like, nah, I'm not doing insurance. My parents have been there, done that. And you just, maybe found your way out and then came back into the industry?
Yeah, that's a good question. So I was born into an insurance family. So when I was born, my parents were running an insurance agency from the house I grew up in. So we were living on the second floor, and on the first floor, there was the insurance agency. And so inevitably, insurance was all around me since the day I was born. And, I remember my parents talking about the challenges they were facing, during lunch, during dinner. Not a very healthy work-life balance, but somehow I still decided to go into insurance. But I decided against working in the sales area. My dad would have loved me to take over his insurance agency. He had built it with my mom and they were running it for, I think, over 40 years.
Mm-hmm.
So there was certainly that hope from his side that I will take over the insurance agency. But it's not really my area. I don't think I'm a good salesperson. That's nothing I believe I am good at. So I decided to join Generali, and it was back in 2004 in their corporate life division, and really had a great experience working for them. I worked 10 years for the Generali group and had, a lot of great experiences, a lot of lessons learned in different positions I held with the company. But ultimately, I came to this point where I asked myself, isn't there more in life than working for just, one insurance carrier? And I was also a little bit disheartened in a way by the little change that was happening. And that was back in 2015, right? So before we had this whole InsurTech wave. And I just found myself questioning, there must be more. And I also started reading about big data and insurance. And I remember there was Henry de Cassis, back then the chairman and CEO of AXA. And he said at a conference that big data is going to change everything in insurance. And, I was really intrigued, and I was working for, one of the largest insurance companies in Europe. And I knew that there was no big data. There was not even small data, like any insurance incumbents, even today, facing issues with siloed data, etc. And also from my own experience, I've worked on a major merger project between the German entity of Generali and a German insurer called Volksversorger. And from that time, I still remembered how difficult it is for people to change their behavior, adopt new ways of working, and especially if there's this fear of becoming redundant, right? And that's what we talk about when we talk about AI and data analytics. So yeah, long story short, I decided to take a break. I went back into academia. I did my MBA with a research component. So I did an academic research study on the adoption of big data in the Southeast Asian insurance industry. And that was really my start into everything tech. And, later founded the Asia InsurTech podcast, worked with a bunch of, great startups out of Asia. And yeah, have like kind of a second career in a way, right? Like first working for an incumbent and then working on like the innovation side. And I definitely enjoy that. And I believe the industry as a whole changed. And also like Generali, I left in 2015. The company today is not the same anymore. And I think that's the case for many, many organizations.
So what you found out about the Asian insurance landscape, what was like the most, you talked about data analytics and then you talked about AI, but apart from the technology and innovation aspects, and the Asian insurance industry landscape, was there any other aspect of, that part of the continent that then drove your like interest? Because again, to say that you are not from the Asian space. And I know that because of Generali, you were introduced into the market space.
Yeah, it's a good question. So, coming from a very mature and very saturated insurance market like Germany, right? And then when I was with Generali and also later, looking in the Southeast Asian insurance industry, you find a lot of developing and emerging countries, right? If you're looking at Indonesia, if you're also looking at the Philippines, Vietnam, etc., right? And that's also how my perception of insurance changed in a way, because in a lot of Western mature countries, insurance is just perceived as a necessary evil. It's like, just something that you need to have. A lot of people are aware of the concept of insurance, but it's nothing that they really value, I guess. It's just like, that's what you do. You have insurance. Whereas in a lot of these, emerging countries that on the one hand have a very low financial literacy, but also insurance has a different importance, because after all, insurance is what allows us to take risks. It what is, make economies and societies resilient, right? And I actually talked in the book with a company from Indonesia, Koala, and they found a hardship. And he also said, like, there is no great economy that got to this point without being well insured. So if there are bumps in the road, you are able to recover and, cut your losses. And yeah, especially if we are looking at emerging markets, the value of insurance is different. And also I feel like sometimes the perception is different. And I believe there is a huge opportunity to reshape the narrative of insurance and not make it this, necessary evil and something that you have to do, but really point out how important insurance is for the overall society and how it can help every individual, every company to take risks and do the things they enjoy, right? So I think that was really when I moved to Asia for the first time with Generali. And that was the time when Generali started, like Generali Filipinas, Generali Indonesia, and like seeing these different challenges and how insurance is really a force for good, or, that's what these companies were working towards. I found that very inspiring and completely different to what I have experienced in Germany. But with this being said, right, Asia is not all emerging markets. You find Japan, which is, one of the oldest insurance markets in the world. It's also one of the largest insurance markets, right? And in the book, I really tried to have a balance between the emerging countries and the challenges and opportunities they are facing, but also looking at mature markets like Hong Kong, like Singapore, like Japan. And also I have Ping An in the book, which is, one of the largest insurance companies. And China actually has a higher insurance penetration than the US today. So really try to have this balance, because I think there's lessons in all of these different stories, all of these different markets, all of these different type of companies.
I mean, it's sort of similar to what we currently have, in the African continent, where you have like a larger chunk of insurance progress in South Africa. And then you then have like, the developing markets, which we call the emerging markets, which you have countries like Nigeria, for instance, Kenya. We're beginning to see a lot of, innovation on that space, where people are, despite being just, bite size, but then it's growing. People are beginning to understand like the different cultural aspects. People are also beginning to engage regulators more often to say that there has to be like change in the way we've, always carried out or done insurance in the past. So I sort of enjoy or like the similarities that we have. This would then bring me into discussions around your book. Like I said, I couldn't get enough of it. And then we have, listeners that are willing to hear about it. First of all, I want you to talk about the book itself. And then we can, talk about 3 case studies from the book.
Hey, this is Brian Falchuk from Boston, Massachusetts in the United States of America. I want to give a shout out to the InsurTech business series, Falumi and Damola, what you are doing to help move the industry forward in the African continent, but also more broadly for the industry at large is so incredibly important. As I think about the future of our industry, it's conversations like the ones you're having that will help us move forward. So congratulations on the success of the show. Please keep at it.
Yeah, sure. Let me maybe start how this book come to exist. I mentioned briefly, I started the Asia InsurTech podcast that was together with Michael Waits, who is the podcast host. And we launched in 2019. And one of the reasons we started that podcast was because at that time, it was like the height of the InsurTech wave, but you heard a lot about what was happening in the West, like in the US with Lemonade and, Metro Mile, or in Europe, but there was very little on what was happening in Asia. And for reasons you also mentioned, like low insurance penetration, etc. You can't take a concept that works in a market like the US and apply the same concept in a emerging market, right? So Asia really needed its own solutions, and there were a lot of great companies, and I really wanted to give a platform for these companies to tell their stories and to, discuss how insurance is changing. And when I started the Asia InsurTech podcast, I connected with Brian Falchuk, who is the original mastermind behind the Future of Insurance series. So Brian and I connected. We had him on our show. I was on his podcast show. And he then reached out and said, like, hey, would you be interested to write a book about the Asian market and, the experience you had there and some of the amazing players we find in this market, and publish it in my series? So that's what we did. So for those who know Brian's first 3 books, so his first book was on insurance incumbents, so insurance carriers. The second one was on startups. And the third one, which only came out earlier this year, is on partnerships. So for my book on Asia, I did not want to focus on either carriers or, startups. I really wanted to tell what I believe makes Asia special. And that is what I feel, at least, around how they market products and how they design products. You find a lot of like bite-sized insurance products. You also find a lot of initiatives marketing insurance to the younger generation. Because if you look at the country like Indonesia, where you have 50% of the population being under the age of 30. So these are all people growing up as digital natives, right? And at the same time, you have very low insurance penetration. So I find this very interesting how, some of the players are marketed to a young and tech-savvy population, but maybe with low financial literacy. So what I did, I have 8 different companies featured case studies in the book, and they really range from developed markets like Hong Kong, Singapore, Japan, China as well with Ping An, but I also have examples of more like emerging markets with India, with Indonesia, to a degree, Malaysia. So yeah, really tried to give that diversity, and also for people who have never worked in Asia. My aim was to really, even if you have never worked in that region, if you have never done any research on the market, the case studies are designed in a way that you also get a feeling for the country. What is it that they are struggling with? And, I hope, Fulmi, for you, it was also easy to understand and get a feeling for, what is this country like in a nutshell, and why have these organizations decided to operate in a certain way and capture the market in the way they did. Asia, just like like Africa. It's a huge continent. There are huge differences, culturally, regulatory differences, etc. But still, there are some overarching lessons learned, and regardless in which market you are operating, those apply. Let me know what case studies did you find interesting, and which ones do you want to dive into?
Reading the book, sort of found interesting 1degree, and this comes from the regulatory point of view, and how they were able to collaborate with the regulators to then design or to help them understand better their market, like the Hong Kong market. They were also able to then get like a virtual insurance license, which this for some markets, but African market, for instance, we don't have those sort of innovation, and that sort of stood out for me to see how they were able to work hand in hand with the regulator, and they were able to get that license, albeit difficult at the initial stage.
Yes, sure. No, it's a great story, and it's just it's an example of what is possible if you're really passionate about something and really see an opportunity. So Hong Kong is a very small market. They have I think around like 7 million people, comparatively small population if you are selling insurance, and we all know insurance is a number game, right?
Yeah.
But Hong Kong has, don't know the exact number, but around like 100 licensed insurer, which is a lot in a market that has such a small population. So what happened was that the regulator said, okay, we are not issuing any more insurance licenses. Like, we have already enough insurance carriers in the country. We are not issuing any new licenses. And then there came along Alwyn Kwok and Alex Liang, the founders of 1degree, and they were really inspired by all the digitization, and they took a lot of inspiration actually from the US market, and thought there's a huge opportunity to digitize in the Hong Kong market. So initially they thought they, would start an InsurTech, maybe just on the distribution side, but really quickly when, talking about the vision they had, they realized they wanted to be in control of product design, and they wanted to be able to react to market changes quickly, because that is something, a lot of insurance incumbents are struggling with, like adapt to change and, really embrace change and react to market changes. And there are a lot of different reasons for that. But that was something that was very important to, the founders of 1degree. So they came to the conclusion that they really wanted to have a license and operate as an insurance carrier instead of partnering with an insurer and then be reliant on them for, making changes and not being in full control. So what they did, they started working with the regulator in Hong Kong and, pointing out all the digitization efforts that were happening in Western countries. And at the same time, the regulator was also thinking about making changes to the Hong Kong market, because despite it being a very advanced and saturated market, online distribution of insurance is still really, really low. So after the conversations they had and, the inspiration the regulator took from, the team at 1degree and the stories they shared, and again, a reminder of how powerful storytelling can be, right? Like sharing these examples and, inspiring not only the founding team of 1degree, but also the regulator in Hong Kong to say like, hey, there's actually an opportunity in this market, and, we have to make that happen. So the regulator and other companies were pushing for that as well, established a new insurance license, a virtual insurance license. What does that mean? Holders of a virtual insurance license are only allowed to distribute insurance using digital channels. Right? So they can't have an agency force. They can't, work with brokers that are selling their products. They really can only go direct to consumers through their digital channels. And, that was something that 1degree was also very passionate about. I guess if they had the choice, they, probably would appreciate if they can also use agency force and other distribution channels. But that was what they were focusing on. So yeah, when the regulator announced that there's going to be this virtual insurance license, they applied for that. Then everyone who has looked into starting an insurance carrier will agree how difficult it is. Like, set aside the situation that One Degree found itself in Hong Kong, where at the point when they had this idea, there was actually no possibility to obtain a license. The only way to get into the market would be to acquire an existing insurance carrier. But they still pushed for it. And then when it became possible, you still have a lot of other challenges to overcome, right? The capital requirement. So you have to raise money as a startup, which there are statistics that 90% of startups fail. Yet you are looking to raise, huge amounts of capital to fulfill the capital requirements to be registered as a licensed insurer. And what was also surprising in a way was that the requirements the insurance authority in Hong Kong, so the regulator in Hong Kong, established for this new license, even though they were only allowed to sell online, were the same requirements as they had before for like a traditional carrier license. And on top of that, they required additional cybersecurity measurements because, the company would operate solely online. So even if it's not a full-fledged license, the requirements to get it are even higher than they used to be when they were still able to get like traditional carrier licenses. And took the team several years and hundreds of meetings with investors, and they worked really close with the regulator also to understand, what are these requirements? What is like the system readiness? What terms of experts they need to have on board for the regulator to grant that license? And there's a good reasons why regulators are that careful and have these strict requirements, because they want to make sure that the company will be sustainable in the long run and will not fold. And people who relied on those companies for their safekeeping and their insurances are not left in the dark in a way. So really difficult to get an insurance carrier license, really expensive, but still I think the example of One Degree shows if you really see an opportunity and if you work together with the regulator, and if you are embracing change, embracing pivoting to find that spot that works. And One Degree today is doing really well. They have actually started with pet insurance in Hong Kong, a line of business that was in the market for several years yet already. And a lot of them, a lot of people working in that space told them like, we don't see a lot of opportunity there. But One Degree identified that it was not marketed right. So they were able to come in and disrupt the market and even grow the market for the overall insurance industry in Hong Kong by, putting a focus on that and putting a new twist and, also looking at product design. The reason they decided to go down that difficult road of starting a licensed insurance carrier in the first place. So that control on underwriting, on pricing, etc., is what made them really successful in that space. And then, consequentially, they added other businesses as well.
The reason why I wanted us to deep dive into One Degree is also because, like you said, for the Hong Kong market, back in Nigeria as well, you are not able to purchase or obtain new licenses from the regulators. You either have to, merge or acquire an existing insurance organization or company. This has been quite difficult for like InsurTechs that are looking to innovate. And so what it is InsurTechs then would have to maybe get like an agency license or an aggregator license and then come on board, or a macro insurance license, whichever the case is, and then partner with existing insurance organizations. So this, in a way, it's actually a new innovative approach to looking at InsurTechs that are looking to underwrite their own insurance themselves and, carry on that risk and distribute the way or however they want to, via like, virtual channels. So again, this is one way that, keeps home.
I want to emphasize something, right? Just because regulation says something is not possible should not necessarily be a showstopper. If you really see value and the most important thing is that something that the people would like and would, because at the end, the role of the regulator is to make sure that consumers are protected. But if this is something that consumers are benefiting from, you can still go. And I think a lot of issues around innovation and insurance has been that insurance companies have been hiding behind regulation and said like, oh, we would love to do something, but we can't, it's a shame, but the regulator won't allow us. So, we don't bother. And that's, I think, how InsurTech around the globe has really reshaped this narrative on, working with the regulator. And you have seen this in other areas as well, right? Like when Uber first came up, if you can show the regulator that there's an opportunity and that consumers will benefit from it, then there's no reason why you can't change regulation.
I mean, absolutely, absolutely. We're just going to move on to Avito, because Avito, really, like you said in your book, is like the future of insurance. I enjoyed, or I love their business model as well as the business strategy. And then customer centricity is one key factor that I think a lot of people miss out on, especially when they're entering a market. Innovation is amazing, technology is great, but once you miss that customer need and want for a product, that could change like the entire cost, of the business. So if you just walk us through a bit, focusing on this customer centricity as well as, the technology.
Okay, sure. Actually, I was debating, and I explained in the chapter why I was debating with myself if I should feature Habito, because Habito, they just launched in June of this year in Japan, right? Like when I had the first interviews with them, they were not even live yet. And then the question is, do you feature such an early stage startup where you don't know if they will make it, right? Like what I said earlier, 90% of startups fail. But I felt it was a really good addition to the book because it shows the cycle of innovation. So Samantha Jotti, the founder of Habito and the CEO, she originally worked in Europe, originally from Italy, worked in the UK, worked in the US, and then got the opportunity to come to Asia and work at the deputy CEO for Sing Life. So Sing Life was, the first new life insurance company in Singapore. And actually, the founder of Sing Life wrote the foreword to my book, Walter the Older. So Sam, she worked with Walter at Sing Life, and what they have built was a whole product, which is not an insurance component, but basically a payment debit card, like a banking stack, essentially, to use this as a pull product and design it as a digital first, mobile first. That's what really Sam was focusing on when she came to join Sing Life. Sing Life later acquired Aviva Singapore, which is just crazy in my opinion. So a company that started in 2017, I think it was in 2020, acquired, Aviva Singapore, which was, much larger than them. And they designed a very interesting way to be able to do that acquisition. And Walter speaks in the foreword about that. So after Sing Life had acquired Aviva Singapore, the biggest insurance deal in Singapore's history, Sam and also Walter and some others from the team, they left Sing Life. And Walter started a new company called Chocolate Finance in Singapore. But Sam took a lot of the lessons she learned from working at Sing Life, but also throughout her career, and wanted to point that at a much bigger market. And that's when they came to Japan. Now, Japan is also a really difficult market to tap into, especially if you are a foreigner, because it's very insulated. Language barrier is a thing, cultural differences is a thing. And also, Japan is a very male-dominated industry. So, number one, amazing that Sam, as a foreigner, started this company in Japan. And what they were aiming for is, so Japan is the country in the world with the highest median age. I believe it's 48. They have a huge issue with the aging population. And what is also the case is that I think over 50% of the country's wealth is with people that are 65 years and older. So naturally, financial institutions have been focusing on this like older demographic. And, agency distribution is like the number one distribution channel in Japan. But they have lost sight of the younger generation, like, millennials. And so what Habito did when they decided to go into the Japanese market, they did a lot of research and they also talked to psychologists. And what they discovered is that the younger generation in Japan has a lot of financial anxiety because, again, an aging population puts a lot of pressure on any society when it comes to retirement, etc. Right? So a lot of people age 30, they're really worried if they can afford to retire, if they will be able to take care of their aging parents, if they will be able to afford education for their kids, etc. So this is when Habito came in, and they are operating under a new license that was rolled out by the regulator. So in this case, it was really a regulatory opening that enabled them to start that business model in Japan. So what they are doing is they are able, under this new license, to distribute a range of financial products. So banking products, asset management products, but also insurance products. Now, their pull product very much to what they have experienced or built with Singlife in Singapore was that they have a bank account with a leading interest rate. So that is what is pulling customers in because they want to get that bank account where they can get the most interests for their money. And interestingly enough, the company is financing these high interest rates with their customer acquisition costs, which in the long run is not sustainable. But that is why they really need to evolve this model and start upselling, cross-selling other products. And that is when insurance comes in, right? And they have built essentially a mobile-first digital experience, but they still have human financial advisors. So people have the opportunity to talk to a financial advisors, but in a digital manner. They have an app, they can, text with their advisor, they can have video calls, etc. I think that is what is really powerful about Habito. They have the technology and they have a large emphasis on technology because that's also what makes the business model scalable. But at the same time, they have that human component, that empathy, that, talking to psychologists about, what is it that people are fearing when it comes to financial freedom, right? And really combine this in a meaningful way. So technology to make it easily accessible, efficient, great user journey, but still have that human component, because at least when it comes to more complex insurance products like life insurance, health insurance, I think most of all still want to talk to a human person. But maybe the younger generation does not want to engage with an agent, arrange a meeting, having them, come to your home. And that might not cater to the younger generation. And that's really what Habito is doing.
It was quite interesting because looking at the aging population as well, for the shifting demography, I think this is also one that is replicated as well in Africa. You have the more vibrant youths within the age range. I think we have the youth vibrancy from about maybe 23 all the way to 35, and this is the larger chunk of the population size, right? And then we have the old money who have understood financial literacy, we probably grew up with financial literacy. Since they're just starting out, probably be on the lookout for Habito and see how they are able to then upscale with this business model. I think it's all encompassing, and one of the very future of insurance.
Yeah, correct.
Hi, everybody. My name is Benton. I'm the founder and CEO of MTech, and we are based in Kenya. I am very passionate about the disruption of the InsurTech space, and together with our model MTech, we are actually serving insurance platform and also white label solutions for the industry. Please keep on listening to InsurTech Business Series podcast, and I hope to see all of you at the conference in December.
You just, deep dive into Pingan. And the reason why we also wanted to have a review at Pingan is because I'm just going to give sort of an insight into what we currently have for existing incumbents. I work for AXA. My partner also works for AXA. So this just sort of, it touched home, right? We've had financial institutions, or we've had, financial conglomerates back home where you have people dealing in the financial services, talking about securities, you're talking about, banking, you're talking about, insurance, and then you're talking about maybe wealth or pensions and all of that. But there is no synergy or there is no integration into that, ecosystem. So you just have people, we are like a group, but then you don't have, that cross-selling, upselling, you don't have ecosystem that has been created over time. And then technology also is a bigger part of it. I just wanted you to touch base on how Ping An, has been able to develop that ecosystem with, scaling vertically, also, establishing their own startup like Good Doctor, for instance, and, how they've been able to leverage on technology to then, like, I don't want to say disrupt, but that's pretty much what they've done.
No, I was really, really excited that I got the opportunity to talk to the Ping An team and completely to Jonathan Larson, who's the Chief Innovation Officer at Ping An and also the CEO of their Global Voyager Fund. So Ping An only started in 1988. And when Ping An started in China, there were hardly any privately owned cars. Today, Ping An is the largest motor insurer in the world. So companies like AXA, who have been around for over a century and who are also operating in China, right? Like a lot of people say, yeah, but China is a big market. Yes, but AXA is also operating in China, and Generali is a lot of these big international companies. But Ping An is really a giant amongst giants. It's the second largest insurer in the world today. So how did they get to that? And I think one of the reasons they have been so successful is to, in a way, preserve their entrepreneurial spirit and to be able to connect different businesses in a meaningful way. Like you mentioned, how they grow horizontally. So some of you might have heard about the Ping An ecosystem strategy. So Ping An is not only an insurance company, but they have launched different ventures that are not necessarily directly connected to insurance. You just mentioned Ping An Good Doctor. So Ping An Good Doctor is a virtual clinic and healthcare service in China. When they first started it, and that is, I think, what Ping An is doing really well. Like when they start a new venture, they really treat it as a startup. So a lot of insurers who have embarked on corporate venture building, what they do is they staff such companies or such ventures with people from within the organization, like the head of IT is now also running, that tech venture. And that is often difficult because running a startup is very different to running an established insurance company. It has a different mindset. It has different challenges. And also to be able to attract the right talent, it is better to really have it separate. And that is what Ping An did. Like they created a separate venture. They got investors. They hired a team, not from the insurance incumbent, but a lot of them were actually coming from, I think, Alibaba, which had started in China as a digital platform. And initially, Ping An was helping Ping An Good Doctor to scale by telling their insurance clients about this new digital health offering. But what has happened now over time, and Ping An Good Doctor is just one example. There's also Auto Home, which is like one-stop shop for everything cars, right? So what is happening now is that Ping An gets 35% of its new business from its ecosystem partners. So people who are like on the Ping An Good Doctor platform or people who are users of the Auto Home company, right? So they are able to use this as a funnel to then attract them to also buy insurance products, right? But again, what is remarkable is not that they set it up with the idea of, okay, this is going to be another, funnel for insurance. I think that is where a lot of insurance companies are failing. Ping An really set it up as an independent business with, independent revenue goals, etc. Ping An Good Doctor today is a listed company, but then connecting it in a meaningful way, and that can go in different perspectives, right? Like when Ping An Good Doctor first started, it was Ping An Insurance that supported Ping An Good Doctor to get their first users. But then after a while, the effect reversed. So now Ping An Good Doctor is operating as kind of a funnel 4 new insurance clients for Ping An. So that is really impressive. What is also impressive is that Ping An defines itself as a technology-first company. So they have a huge emphasis on technology. But what they are also doing is they are not only keeping the technology to themselves. And that is, again, something a lot of the big insurance companies are doing. Like they develop their own tech and they see it as their competitive advantage. But the reality is developing a state-of-the-art tech stack is really expensive because technology evolves so rapidly if you just look at the rise of ChatGPT in this year alone. So you constantly need to update it so it doesn't become a legacy and it stays top of the art. And what Ping An is doing, they are actually also exporting their technology. So in the book, there's an example that through their Global Voyager Fund, they have taken a stake in a US startup called Snapsheet. So they are working in the US market when it comes to motor claims. Now, Snapsheet is working with, I believe it's 7 out of the top 10 motor insurers in the US. Now, with Ping An's investment in the company, they also started to using some of their visual claims technology they had developed in China and deploy it with Snapsheet in the US. So arguably, through that partnership and through their strategic investment, they are working in the disguise of Snapsheet with some of the largest insurance players in the US market. This is not only great because they were able to monetize their tech stack, which enables them to then spend more money on tech innovation, but it also helps them to improve the model because everyone who is familiar with AI and machine learning, the more data you feed into an algorithm, the better it gets, right? And then you can argue that you have maybe different cars in the US than compared to have in China. So by adding more variety to the model, more data to the model, you improve it, which then Ping An in China is again benefiting from. So it's like really unique how Ping An has built this range of different companies that are operating in different areas, right? Like auto, home, good doctor, but also the tech stacks they have built. And wherever there's an opportunity to monetize their technology or just build a new business model in itself, they are jumping at it. And it doesn't need to be directly related to insurance. It's not about guiding your own innovation and seeing it at a competitive advantage, but seeing the competitive advantage and expanding horizontally and also, monetize different parts in different ways. So that is, I think, what is really unique and probably at least one of the reasons why Ping An is today second largest insurer in the world.
I mean, amazing. I like the fact that in the words of the CEO for AXA Nigeria, she would say that we should be cooperative rather than engage in competitions. And so that's collaboration with competition. Mm-hmm. And I think that that's what Ping An has been able to do with their technology infrastructure. And I think that's just the way to go. So if you could just talk about where, people could get the book and how they could access you, like what media platforms you are available on for, further discussions around the book.
Yeah, sure. So the book is actually called The Future of Insurance, Volume 4, because it's the fourth book in the Future of Insurance series, and then Asia Rising. So if you go to Amazon, all the Amazon stores have the paperback and hardcover issue of the book. There's also an Amazon Audible audiobook, which I recorded, which was frankly probably the most difficult in the whole book writing experience. But yeah, and there's also a Kindle ebook version. Just search for The Future of Insurance, Asia Rising, or just search for my name. It's actually a very unique name. That's also the reason why I did not take my husband's last name. Theresa Blissing there. It seems to be only one in the world, which is me. So yeah, if you want to connect with me on LinkedIn, Instagram, feel free to send a connection request.
Thank you very much, Theresa, for coming to the session.
Thank you so much, Palumi, for having me. Also on, the day of the release of my book. Thank you so much. Really love chatting with you.